Welcome back to the Mobile Home Park Investing blog with Keel Team at Real Estate Investments. I'm your host, Tristan Hunter, and today we're going to be breaking down the top performing mobile home park REITs, which are Sun Communities, ELS Properties, Flagship Communities, and UMH Properties. We're going to be looking at their Q3 2025 performance, breaking down their stock price performance, net operating income, lot rent growth, as well as occupancy across the board. And then we'll conclude with a brief analysis on what we found from this quarter. So if you get value from this video, please like, please subscribe, stay tuned for more content that we do release. We do this every quarter. And if you're looking for more details on this, we have attached the link to the full blog in the description below. But with that being said, let's jump right in. First and foremost, Sun Communities. So Sun's stock price moved slightly above last quarter, climbing from about $126 to $129, but it's still below last year's level. So over the past 12 months, the stock has been pretty volatile, even though the company does continue to perform well operationally. Their NOI did increase to $171.8 million this quarter, which was up from both last quarter and the same time last year. Which, obviously this is, as you'll see, is the most of the growth is tied to the continued rent increases that they have implemented. So occupancy moved up again. It's now at 97.9%, and lot rents increased from $730 to $737 quarter over quarter, and up more than 5% compared to last year. So the only area showing a downward trend is their portfolio size in terms of the number of communities, which is slightly smaller than a year ago, obviously because they had some dispositions. But overall, Sun did have a strong operational quarter and year-over-year performance that we did see. Next up is ELS Properties. So ELS, they saw different performance. Their stock price did decline over the past year, falling from about $70 last year to $61 this quarter. Operationally, though, they do continue to grow. Base rental income reached $188 million this quarter, which was up from last year, and lot rents also increased about 5.5% year over year. So that could be the result of that. Occupancy also held steady at 93.9%, which was slightly below last year, but it's still strong given the scale of their portfolio. They've seen a lot of acquisitions, and as we've seen, ELS owns more than 200 communities and added more lots over the past year, which was overall a solid operational year, even if the market hasn't rewarded the stock price yet. Moving on to UMH Properties. So their stock price also dropped from about $20 last year to $14.65 this quarter. But behind the scenes, operations are moving in the opposite direction. So their NOI jumped to about $98 million this quarter, which is a meaningful increase compared to the last quarter. And the occupancy also improved from last year. It's now at 88.5%, which is a slight increase, but an increase nonetheless. And lot rents also rose from $534 to $566 year over year, which is about a 6% increase. And they also did expand their portfolio from 139 to 144 communities, increasing their lot count. And overall, pretty similar to ELS Properties, as we saw. Everything else is showing an upward trend, despite the stock price going down a bit, as we did see. And then finally, Flagship Communities. So they had one of the strongest share price performances this year. It climbed from about $15 to $19. The NOI has grown steadily from $15.1 million to nearly $17 million this quarter. Occupancy ticked up again, reaching 85.1%. Lots rents also increased from $448 last year to $483 this year, which is roughly a 7.7% growth year over year. And they also expanded their portfolio from 82 to 83 communities, so only one acquisition this year, adding some extra lots there. But overall, you can see that they had one of the stronger performance compared to the other REITs, everything showing an upward trend, and also building on from last quarter as well. All right, and in conclusion, there's a clear pattern that emerges with the four REITs that we did look at, and that is, NOI did increase across the board year over year. Occupancy remains strong, and that's supported by the demand for affordable housing. Lot rents increased between about 5 and 8%, which is likely driven by inflation and supply-demand imbalance. and portfolios are generally expanding, especially for ELS, UMH, and Flagship. I mean, Sun Communities did see a bit of a decline there, but overall upward trend and all the other metrics. So the biggest contrast that we can see this quarter is between the operational performance and market performance. While the business does continue to strengthen, which we saw across all the other metrics, the stock market hasn't really rewarded all of them equally, especially coming to Sun Community year over year, ELS and UMH Properties. The only one that really stands out there is Flagship Communities, which saw upward growth in every single metric that we looked at. So overall, I mean, the manufactured housing sector remains one of the most stable and consistent real estate asset class that we have seen. And it's really backed by strong demand drivers and a steady financial performance heading into 2026. It's going to be an exciting year. We're going to be touching on the quarter 4 performance of 2025. It should be released sometime next year, February, March. And by then we will have another analysis for you. Thank you so much for tuning in. If you're looking for additional resources, we've included a link to a free ebook in the description below, looking at the top 20 things that Andrew Keel has learned from investing in mobile home parks. Highly recommend giving that a download if you're starting out and looking for some information and some insider tips. But until next time, we'll catch you then. Thank you so much.